Yeah, because technically the price movement, candle movement, it's all going to be the same, right? It's all going to be the same. It's just going to be a change in volume, change in volatility on certain pairs, which we will be basically looking at. So let's do this. So we're going to do, we got GBP JPY, we got USD CAD, we got GBP AUD. Haven't really traded GBP AUD, so it's going to be interesting. You're in New Zealand? No, that's a very, very unknown. Haven't really looked at that at all. So, like, we want to make this simulation as productive as possible. So we're gonna probably stick over here. We got gold XAU USD. We got Euro JPY. All right, perfect. One, two, three, four, five. Five pairs. US 30 is an index. So we're probably going to do this over here. So let me just, if we can bring on the sound over here as well. All right, so we got USD CAD, pound yen, euro JPY, gold, and pound AUD. Are we ready? And we got GJ, UC CAD, gold, euro JPY, GB JPY. Our favorite GBP JPY. Can USD CAD be the winner? Can USD CAD be the winner? Oh, USD CAD is. Yeah. All right. Perfect. So USD CAD it is. Okay. But hey, listen. Like the price action, everything is going to be the same. Candle movements, everything is going to be exactly the same, right? So we're gonna do USD CAD over here today. Something different, right? Something different, something more educational. So we'll do this. No audio. I think your speakers are down. So let's see. That's hilarious. USD CAD, USD CAD. Where is USD CAD over here? USD CAD. There we go. We got to download the last 2 years of worth of data. Once it's going to download, then we're going to continue on. Conor McGregor. Austin Silva's new video on YouTube is so dumb. Conor McGregor, since when are you in Forex? Haven't you learned your lesson? All right. Um, all right. So we're gonna let this download over here. Okay. So the most interesting fact about USD CAD is in the New York session, not only the US dollar is open, but also Canadian dollar is open as well. So we're going to see how that can affect price. Okay, 79%, 80%. All right. So we're almost done now. Perfect. There we go. It's updated from 2019 to 2021. Probably gonna update the economic calendar over here. That's it. Good. Let's go towards our random date generator. So we need around 10 dates. So we got it around till 2019, right? We got 2019. This is from the 30th. Oh, January 2019. Okay. No problem, no problem. January 2019. Actually, we're going to go towards like September, October. So we need basically current price action. We're going to go towards 2021 over here. 2021. Oh, something's not right. Okay, there we go. 2021. This is obviously January. So we're 29th. We need Sundays. And the reason we need Sundays is because that's when the market opens. Okay, 10 dates. Let's get these dates over here. We got April 2020, March 2020. Let's do March 2020, 8th March 2020. And the reason why March, because there's volume in that time. So I think it's going to be pretty good over here. 8th March 2020. So let's see how this goes over here. Let's close this new simulation. We're going to start with USD CAD. We're going to go towards 8th March 2020, 8 March, CAD. We're going to let's start with $3,000. Start with $3,000. New York close. Leverage is going to be, let's do like 200 leverage. 200 leverage. Yeah, let's do that. Previous daily candles, we need 150 daily candles in the past. That's what we need right now. And perfect. Everything is set. Let's get this going over here. So first of all, we need our weekly chart. Then we're going to need our daily chart. 4 hour, get the 1 hour, 30 minute, maybe 15 minute we're going to take a look at. All right, perfect. Let's get our naked charts over here. Ooh, someone drew a red line over here. What does that mean? Danger? Danger, danger. We got 1 hour, we got 30 minute, and we got the 15 minute right over here. Perfect. Remove the indicator, sir. Yeah, no problem. We removed it. Let's remove this indicator over here. All right, perfect. So whenever we start simulations, the best thing to do is to go to your time frame, right? Or go to the time that you basically trade. So if you look over here, looks like there's a huge gap, right? And the gap you see is way up over there. So obviously, like, whenever we start a simulation, whenever there's a gap, we talk about why gaps happen, and we're going to discuss that again over here. So the reason why gaps happen is because over the weekend, when the brokers are closed, and when the brokers are closed, we can't see where price is moving, right? But every time over the weekend, price is moving all the time, but we don't see it because the market is open, but the broker is closed, so they can't really show us where the price is. So over the weekend, I guess what happened is the price basically moved up to this price level over here, and which is why we see a gap, because when the next time broker opened, we see this huge gap. So now the question is, if we measure this gap is around 130 pips, right? So the question is, will this gap get filled or not? That's something we need to identify over here. But obviously at this time, like, we're basically not trading because this is the Asian session, start of the Asian session. And whenever the Asian session starts, you need to look at USDCAD and ask yourself, is there enough volume in the Asian session right now? And the answer is going to be no, there's no volume at this point. So what we're going to do is we're going to go to our pre-New York. So we're going to go to forward, and oh wow, damn, still going up over here. Okay, so let's go to pre-New York over here. This is London Open. If you can see the time, this box is going to be really important. On this box, this is where you see the time. It says 1000 hours. This is 3 a.m. Eastern. This is also London Open. So 4, 5, 6. So now we are at 6 a.m. Eastern at this point. Right, so let's take a look at the weekly and let's see what's happening here in the weekly. So obviously we can't look to the left-hand side because we don't have that data, but we only see this weekly candle, but we also see this big gap from down over here. So let's take a look on the daily time frame over here. Daily is also like, there's a big gap over here. We can't see to the left-hand side, but obviously we're going to try to see if price can continue down to fill this gap. Let's take a look on the 4 hour. On the 4 hour, however, what we see is that we're basically creating some sort of, all right, let's get our chart studies over here. So we got our chart studies over here, and what we want to see is, hold on, this is line studies, yeah, right there. So we got a resistance formed over here. And what we need to identify is that, is there a support forming at this point or not, which is something we can't see right now. So what we're going to do is we're going to clone this area. We're going to go to the 1 hour time frame to see some more information. And what we see on the 1 hour here is that obviously we're in an uptrend, right? The trend we can identify is where the gap is. I mean, gap moved bullish, so we're basically in an uptrend. And looking at this current 1 hour, what we can kind of identify is that, okay, so there was this support to the left-hand side, and this candle is closing like a weak bearish candle, right? So when a candle is closing like this, I personally think there's a high probability for the next candle to probably, oh wow, this is like a 40 pip range, for the next candle to probably continue up in this range, right? Because we are in an uptrend, price is creating some sort of a support over here. So I think there's a very high probability for price to move up. If you look at the smaller time frames, let's just clone this over to the smaller time frame. Let's go towards the 30-minute time frame. And if we zoom in over here, we can clearly see how this was some sort of a fake out, right? Because to the left-hand side, let me get this right over here. So the left-hand side, we had a support form, right? Price came up, came down, created a support, and then price went up again, came down, did whatever dance it did in the London session, and then you had the candle, basically price made a high over here, came down, broke the support, and now it's closing back above the support, right? And what we know about fake outs is that if price is breaking below support and closes back in the support, there's a very high probability for the next candles to continue moving bullish to the other side of the resistance, right? So we have three confluences on our side. The first confluence is that overall we're in a bullish trend. Second confluence is that price tried breaking below the support, which was formed right over here during Asian session, and then now it's closing back above support. And number third confluence is that we have a bullish candle forming on a 30-minute time frame. But the problem is that we have the 1 hour time frame candle closing like a bearish candle. So at this point, we'll just need to maybe anticipate price to break above this high and then continue moving bullish. Gap, no, if the gap is not going to get filled. Gap is only going to get filled if we start closing back below the support. So let's take a look on the 15-minute time frame over here. So 15-minute also looks good. We have this minor resistance right over here. I think a buy can be executed at this point with a stop below the previous candle and anticipating price to continue moving bullish up in this range. That's fair enough. I think that's going to be a pretty good idea. Plus, also, we are at pre-New York, which is a high volume session. So I think that's going to be a good trade at this point. So probably going to execute a buy over here. So we're going to risk around. Can we anticipate sells at the break of support? Yes. The only reason there's going to be sells is that if this next candle starts breaking below this low right over here, and then we can anticipate price to come down and come down to this area down over here. What's this price? This is 1.35450. If we break below the support, but we tried breaking below with this candle, but the next candle closed back in the support, so this becomes a fake out. So technically, there's a high probability for the next candle to continue moving up. So we're gonna go with like 1.5% risk per trade over here. It's going to be a 20 pip stop over here almost. So we're gonna do a 20 pip stop. Take a buy position. Yeah, wait for the 15-minute resistance to break above. No, and the reason why is that if we wait for that to, we have the confirmation. If you're waiting for that smaller time frame, where is it? Smaller time frame resistance to break, then basically there's a confidence issue. But then you can do that as well. If you're being a little bit cautious. But looking at the higher time frame, we have a big rejection, close above support. Looking at 30-minute time frame, close back inside the range. So the higher time frame confluences are there for price to continue moving bullish. So we're going to see what happens over here. Obviously, we're going to be managing our risk accordingly as well. So looking at the 1 hour time frame here as well, as long as if this 1 hour candle starts breaking the high of the previous 1 hour candle, then we know that this is going to be a pretty good idea for price to continue back in the range. And if we measure this range, honestly, this is a pretty big range over here too. It's like a 40 pip range. So we're going to stick to the 30-minute time frame and see how these candles close over here. You manage risk on a 15-minute time frame? Yes. So we're going to manage risk on a 15-minute time frame. All right. So we're up about 7 pips, 8 pips. Pretty good. So we're about 16, 15 pips up over here. I'm going to close partial positions. I'm going to close around 70% and leave the rest running at break even over here. If you look on the 1 hour time frame, we've broken above the high on the 1 hour time frame here as well. So I think this should be a pretty good trade. So you don't pay attention to the low time frame. No, I don't pay attention to lower time frame. This trade was taken on the 30-minute time frame only, so we stuck to the 30-minute at that point. And if you look at the 15-minute kind of like, doing a little rejection, whatever it's trying to do. But overall, we're focused on that 30-minute. So now when we look at the 30-minute candles over here, you can see how candles are closing bullish, and we need this candle to respect the low of the previous candle to continue moving bullish. I wouldn't have taken this one at the point you did, honestly, but it looks like it worked. Yeah, I mean, the confluences were oh wow, look at that. Almost came down. Yeah, but the confluences were there. Like we explained all the confluences, we explained how it makes sense to continue going up. Price went in profits, we secured profits, and we're letting it run over here now. And this candle is coming down to a close over here, and looking at the 1 hour time frame, if the 1 hour candle is closing bullish, there's a high probability for the next 1 hour candle to continue moving bullish at that point as well. So so this is a runner we're gonna leave running at this point here. So this was a classic, what would I would say, like a fake out trade at this point, because 30-minute candles did a fake out and we went in. So all the trades we're going to take over here are going to be based on the 30-minute confirmation time frames. So now this is the runner right over here. This is the new 1 hour candle started. So now the thing about simulations is that during simulations, the hours, the 30 minutes, they go really, really fast. They go really, really quick. So when you're trading live, that's where the patience comes in, where you're waiting for the candle to close, you're waiting for the 15-minute candle to close. Because sometimes what happens is when you're looking at the smaller time frames, you're basically really, really micromanaging trades on the 15-minute time frames or the 5-minute time frames. All right, so we're approaching a high over here. Now at this point, we don't know whether price is going to continue moving up to break this zone or it's going to reject this zone. That's something we don't know. So at this point, probably going to close 90% of the position and leave 0.01 running with, and probably going to move our stops below this 30-minute candle right over here and leave the rest running at this point. Nice one. So the three confirmations were back in the 4 hour rejection. Yeah, so let's go over this trade again, right? So looking at the 4 hour, we had no confirmation, right? For looking at 4 hour, there were no confirmations at all. So we jumped down to the 1 hour time frame, and looking at the 1 hour time frame, what we saw was that price basically created a support once the support was formed. And when we came to the charts, when this candle closed right over here. And when this candle closed, you're looking left to see, and you're looking left and see that, okay, we closed above the support. Now, we cannot take a sell at this point because the bearish candle closed back above support with a huge rejection, and we cannot take a buy based on the 1 hour time frame here. And the reason why is because we don't have a 1 hour candle closing bullish, right? So 1 hour candle is a stronger confirmation time frame. So now we jump down to the 30-minute time frame. And when we look at the 30-minute time frame, we had these new confirmations, and these confirmations were, okay, we created support. This candle broke below support and closed below support, but obviously we couldn't take a sell on the 30-minute because, we needed the next candle to break the low or create some sort of a resistance. But what happened was that the next 30-minute candle, all right, let me just remove these arrows over here. So what happened was the next 30-minute candle, it closed back in the range, right? So when we're closing back in the range, and we know that 30-minute candle confirmations are somewhat stronger confirmations, it closed back in the range, and then we start thinking about, okay, well, since the trend is bullish, we closed back in the range, what's the probability that price is going to continue back to the top of the range, provided that this move down was a fake out? So then you're like, okay, you know what, there's a higher probability for price to move bullish rather than to move bearish. And that's where the trade was executed, right over here. Stop was kept below this 30-minute candle. This was a 40 pip range, 20 pip stop, and basically played out just as we expected it to play out. So I'm pretty happy with this. This retest of the previous candle happens high quite often before continuing. Oh yes, exactly. Beautiful. One trade for the day, and stops are at break even over here. And so is it the same as just above price before dropped? Yes, exactly. It's the same just because price dropped right over here. So would you have only considered to sell if that second 30-minute candle broke? No, if we would have sold if the candle closed bearish over here. But But we're not going to talk about what ifs, what if this happened, what if that happened. We're only going to talk about what's happening in the price right now, and that's it. Because we don't want to deviate from what's happening right now. All right, so that was one trade over here. And let's move on to the next hour here, and let's see how the next hour closes at this point. Oh, wow, we moved continued up over here. Continued moving bullish. All right, so probably going to close everything at this point. So this ran for 69 pips over here. All right, so we're going to close this. And then how much of your position will you be closing and how much will you leave as a runner? I think you can watch the recording. We already talked about that. So we're going to close this. And now we're going to move on to the next New York session, right? So this was one New York. We took a buy, and now we're going to go towards the next New York session. Looks like we also broke above the high on the 4-hour candle here as well. Okay. Oh, it looks like we're coming down over here. So this is the Asian session. We're moving into the Asian session over here. Slowly, we're going to move to London. This is London Open. London Open, you can see there's no volume over here because, you know, the USD is closed and CAD is closed, so which is why we don't see any volume at this point. 4, 5, 6. 6 a.m. Eastern once again, right? And 6 a.m. Eastern is when there's usually volume over here. And let's do some analysis here now. So, looking at the daily is still bullish. This daily candle may be wicked down to continue moving bullish, but we don't know how far it's going to go. So we're going to have to take a look at the smaller time frames over here now. So let's take a look on the 4-hour. 4-hour is basically creating a structure. And the kind of a structure 4-hour is creating is something that we're familiar with. And this is called like a break and retest, right? So basically what's happening on the 4-hour at this point is we see price created resistance, went up, made a high, came down, created support, and now it looks like it's trying to continue going back up. This is what it looks like over here. But we need confirmations now in the small time frame because we all can agree that the bias is bullish at this point. Daily is bullish. 4-hour has this range to fill over here, so it should moving bullish. 4-hour also created a support, so the bias is bullish based on the 4-hour time frame. So let's move on to the smaller time frames over here on the 1-hour time frame, and let's see what's going on here. So looking at the 1-hour, we have price doing some dances over here, and the kind of dance we see over here is like we created a support, and then as price moved up, it looked left and it saw that there was a resistance form right over here. So price broke above this area. And now the 1-hour candle closed like a weak bullish candle. Whenever you have a weak bullish candle closing on a 1-hour time frame, that means that there's a less probability for price to continue moving bullish at this point. So we'll have to be extremely careful over here if we're going to take some buy positions, because this candle basically, this also means sort of like a rejection from the top side, so there's no confirmation for buys at this point. So let's take a look at the 30-minute time frame. So looking at the 30-minute time frame, so first of all, what we got to do is we got to remove these zones. Remove, and let's zoom in here now. Okay, perfect. So perfect. So we were right. There's no confirmation to take a buy at this point. The only buys that would make sense over here if the next 30-minute candle breaks the high of the previous 30-minute candle, and then we can have price continue up to fill this wick and then eventually continue up towards, you know, this area right over here. But as long as we start respecting the support, I think we can have some confirmations to go up, so we'll have to wait at this point now. Okay, so we're breaking the high over here. We haven't really quite broken the high at this point. Yeah, we haven't really quite broken the high. Okay, so we're breaking the high over here, right? Now, this is something really important. So I'm going to talk about what happened on Thursday. On Thursday, what happened was that on pound yen, if you guys remember, price broke the low in the first few minutes. We took a sell, and then, well, I took a sell. There's no we, right? I took a sell, and price went back in the range and stopped us out. That happened in the first 2-3 minutes, right? If you look at the time, this is breaking the high in the first 4 minutes. So I want to be basically careful over here before taking a buy, because if it's breaking the high in the first few minutes, it could come back in the range, something that happened on Thursday. So I'm using the example in Thursday to not take a trade at this point right over here. Let's take a look at the 15-minute. Yeah, it's also right over there. The 30-minute candle, the 15-minute candle is about to close too. If the 15-minute candle closes bullish, then we can anticipate the 30-minute to continue up. So we'll have to wait and see. Would you wait for the break in the next half? Yes. Yes. So if you look on the 15-minute time frame, the 15-minute candle is about to close over here in about 2 minutes, 2 simulation minutes. And there we go, 15-minute candle closed. Looking over here, closed like a weak bullish candle. Let's scale fix this over here. All right, let's scale fix this over here. So now, since the 15-minute candle has closed bullish, and we have this minor resistance over here, right? And if we measure this range, this is like a 5-6 pip range. Can't really take a trade over here. So let's take a look on the 30-minute time frame now. I'd want to take a buy if this 30-minute candle breaks its own high to continue moving up. That's where I'm going to possibly be taking a buy if it breaks its own high. But if it doesn't break its own high, then probably there's going to be no trade and we'll have to wait for a better support confirmation. So entering before the first 5 minutes when breaking the high too early? Yes, it's too early. That's what we learned based off of Thursday. So our bias is bullish. We're looking for buys at this point. This 30-minute candle is about to close in about 10 minutes. So it's about to close, so probably going to wait for it to close. If it closes bullish, then we're going to have some sort of a confirmation for price to continue moving bullish. Yeah, I think that's going to be a better idea. Because if it's coming to a close, then it's better to wait for it to close. Oh wow, look at that. Just straight rejecting over there. Oh damn, alright, so we're coming down. Coming back up, alright, so we cannot take a sell because we're closing above this area. Now, this is a extremely delicate situation, right? The reason why it's a delicate situation is because at this point, there are two things going through our minds, right? The first thing is that goes through our mind is that if this candle breaks the low of the previous candles, are we going to continue moving down or not, right? Brendan Hayden is making some lines over here, which makes sense for price to create like a support and then continue moving up. So we're basically only looking for buys at this point. The only reason we'll be interested in sells is if a candle closes back below this range. If a candle closes below the support, then we can start to look for sells. But other than that, we're still looking for buys over here. Yeah, so I think it's going to be a little bit of a waiting involved at this point. All right, so we're coming back in the range. This needs to close back in the range. Hey, son, can you ask the viewers more questions and make the chat more interactive? It'll be nice to challenge the members here. Rakil's great grandpa. I think if you change the name quickly, we're going to leave you here. But if you don't change the name, we're probably going to have to kick you from the webinar over here, please. So let's respect all that and let's change the name. Let's take a look at the 15-minute time frame. Nothing yet. So we want this 30-minute candle to close over here because if we take a sell at this point, there's a support right down over here as well. You know, so we're waiting at this point. There's the support, which is basically, which might cause some issues. Right over here, right? And if we measure this range, this is like a 10, 13 pip range at this point. This candle is going to come to a close in about 10 minutes. Three minutes left for this candle to close, and the 1 hour candle has closed right over here. We're closing back in the range. So let's take a look on the 1 hour time frame. No impulses, no impulses, because if it's at support, we want the candle to close below support and have enough range for price to continue down. So if you look on the 1 hour time frame, 1 hour is closing back in the range. That's perfectly fine. But the problem is on the 30-minute, we can't take a sell because the rejection is around 10, 11 pips away. Are you expecting the support to be stronger because your bias is up? Yes. You know, the bias is bullish at this point. So I'm only looking for buys. Can't take any sells over here. So you need to ask yourself a question. Can we take a sell at this point? Right? And if we can take a sell at this point, then we need to take a look at, okay, where can price move down to? And the first thing we can identify is, if I can bring my box over here, the first thing we can identify is that there's this rejection zone right over here. So if we do take a sell, I don't think it's going to be a smart thing to do because our range is very limited. It's like a 9, 10, squeeze it up to 11 pip range. It's not enough range. We don't have enough confirmations here. So we're waiting. We can't take a sell. We can't take a buy. Basically, maybe we can take a sell if price breaks below this area for it to continue down in this 20 pip range, right? Because we need to identify what's going to be a much safer target for sells. We have a clean range down over here, right here, clean range to take a sell. In this range here, we got one problem over here, then we got a smaller range right over here, so it's not much better, right? But if price starts closing back above this area, then we can anticipate the volume in New York session to fill this range and probably to come up to fill this whole area here as well, which is a clean candle here to the left-hand side. So that's why I think it's going to be much better to wait at this point. Could you take a sell based on a 1 hour only? No, we can't, because just as I explained, this is a rejection area here. You can't. Why would you take a sell where there's a rejection area here? So we can't take a sell. It doesn't matter if the 1 hour is giving you a confirmation. What matters is that there's a rejection here in the 30-minute time frame. So you just got to wait. Just got to wait for price to print something you can identify as a good pattern and then execute on that. Trust me, great sells are going to be below this area because you have a clean 20 pip range. Always aim to put yourself in the best position to win, right? Even though it's coming down, there's this rejection over here which we cannot ignore. So it's better to wait for price to break below this area to take a sell in this clean, easy range. Because we don't know whether price is going to reject this area or continue moving down. That's something we don't know. So it's very, very important to wait. Extremely important to wait. Even if you look at the 15-minute time frame now, 15 minutes is going to show you some different market structure over here. It's going to show you some ranges. It's going to show you some more information, but this gets really, really tricky on the 15-minute time frame. So that's why we're going to stick to a 30-minute and we're going to stick to a 1 hour time frame here. So this candle is about to close over here and we're going to see how it kind of closes. See that? We closed like a rejection candle on the 30 minutes. So there's no sells at this point. There's no buys at this point. Because the candle is closing bearish, there's no buys. The candle is closing weak bearish, rejecting this area, so there's no sells. So whenever you're looking at price, just ask yourself these two questions. Can I take a sell? And start to explain yourself the reason why you can take a sell. So I think, again, good sells are going to be below this area over here. And if we come closing above this area, then we can have good buys for price to continue going up. Because this is like a range over here, which is like a smaller range. I'm sure some people take sells in these ranges for price to go down and up, but me, I like to see clean traffic to the left-hand side because I want to take the most easiest trades I can find. I want to take trades which require zero effort. Right over here would have been pretty sticky situation because you can see how price is just rejecting and just not that good at all. So perfect. So now when we look at the 30-minute time frame, we can see the candle is closing bullish over here. And okay, so at this point, if we see a bearish candle forming right over here on the 30-minute time frame, right? Let's say, for example, we have a bearish candle forming like this on the 30-minute time frame, right? This is going to be a much easy selling confirmation. And the reason why it's going to be a much easy selling confirmation is because now we have, well, we don't have that now, but we would have this candle closing bearish below these candles here to the left hand side, and then we can anticipate the next candle to continue in this now, which becomes a 20 pip range, because then now this becomes like your destination, and then you have this bigger range over here. Right, so this is what we want to see a 30-minute candle to close like this, right? So yeah, that would make sense at that point. So basically, we're going to wait for this 30-minute candle to close over here. This is also the New York Open right now. But if we start closing back above this range, then I think there's going to be an opportunity for price to continue moving bullish. But at the same time, we have this minor resistance over here, which we need to take into account. Can you take a buy based on a 15-minute? No. We're not looking at the 15-minute. We're only looking at the 30-minute confirmations, which are much better, stronger confirmations. So that's the only thing we're looking at over here today. Perfect. We're breaking above this area. We just need, so at this point, I personally think impulse entries are not going to be good. The reason why is because the stop is massive. You have a massive 20 pip stop over here. And also if price is coming above this area, we need a candle to close above this resistance, right? Because what happened in the past was because this candle went up, and look what happened to this candle. This candle made a wick and came back down. So if this candle is moving up, we don't know whether this candle is going to make a wick and go down or not, because this candle hasn't closed above this area. So we need a candle to close above this area to give us a confirmation that, okay, now we can continue moving up. At that point, was the resistance still valid? Price from support, so I bought, bullish hammer. I'm getting a bit confused when there's a wick destination and shortly after support resistance, why I count this as good opportunity? Because at this point now we have a support form down over here, right? We have a support form down over here. So if that candle closed bearish, then we could have had price moving down. So right now we're just looking at how price is going to close at this point over here. We got 10 minutes left for this 30-minute candle to close. We're still at this wick over here. This is where people take buys and then they get stuck, because we don't know whether this candle is going to close above or it's going to close below. We don't know that. This candle is about to close in about 1 minute over here. There we go. 30-minute candle has closed. 30-minute candle has closed at this resistance. So now we're going to see if this is a good opportunity to take a buy at this point or not. So let's take a look on the 1 hour time frame. 1 hour candle is still bullish. Looking at 30-minute time frame, we still look good. Looking at the 4 hour time frame, 4 hour candle is still moving bullish, but now we need confirmations on the smaller time frames. Let's take a look on the 15-minute. 15-minute is doing a retracement here as well. Can I say something over the mic? Okay, sure. Yep, go ahead. Yeah, nice. Yeah, that's what I do too. Like when the 15-minute is confusing, go to 30-minute. If 30 minutes is like that, then we go to the 1 hour time frame. So perfect. Looking at this right over here, we can see how we're coming back in the range. So there was no buys. Also because the 15-minute candle was also bearish at this point. So now I think we're in a pretty good position to see if we're going to create a support over here for price to continue moving back up or not. So I guess we're just going to wait here and see. Oh, damn, we're coming back in the range over here. All right, so now, oh, wow, what's happening over here? Is this news? There was no news over here. Yeah, there's no news over here. Lots of volatility here. Damn, wicked all the way down. So I get that at this point, our support is probably changed down to this area over here, because this is where our support is established now. So we got to wait for this candle to close. Can you show us a scenario of lower time frame being confuses? Yeah, look at the 15-minute time frame. Look at all this confusion on the 15-minute time frame, and look at the 1 hour time frame at this point. So now basically we can move this little zone down over here, because 1 hour is creating a support over here now. And look at that 1 hour time frame. Wow, look at that. Huge rejection from the top over there. Let's take a look on the 4 hour. This is also a new 4 hour candle at this point. 4 hour candle is closing bearish. Basically no confirmation for buys, no confirmation for sells, because we're in the 4 hour range. Looking at the 1 hour time frame, 1 hour time frame is closing bullish, but take a look at this, right? take a look at this on the 1 hour time frame. So it's been around 3 hours on the charts, in real time, that we didn't really take a trade. It's something that happened on Thursday too. We waited for about 2.5 hours to take a trade, and same thing happening over here. So if we look at the 1 hour time frame, let's try to tell a story, right? Candles came up, rejections, created resistance, came back down. So this, we had a bearish candle forming. 1 hour candle closed like a very weak bullish candle with a huge rejection. Next 1 hour candle closed bullish, right? When this candle closed bullish, this closed with a bigger body than the previous candle. This means now slowly the bullish volume is probably coming back in the market, because now the 1 hour candles are closing slowly bullish. So this means there might be some opportunities for price to continue moving up. So we're probably gonna try to see if we can get that buying confirmations here or not. So we'll have to see if we can see some, or if we can get some sort of a candle closing above this area here. Is H1 high a good target? Yes, right over here. On the 1 hour time frame, this is going to be a really, really good target if price is going to continue moving bullish. So we're going to have to wait over here for a little bit for the 30-minute candle to close, especially after look at that. We're starting to break the high over here. This is what we want. We want candles to stay above this area for us to execute a buy position with a decent stop loss for price to continue moving bullish. So we're going to wait over here now. Let's take a look at the 15-minute time frame so we can get some confirmations. Probably not over here. We'll have to wait for the 30-minute candle to close. Can we take a buy on the 15-minute time frame if the 15-minute candle closes bullish? I think we could do that, because we want this 15-minute candle to close bullish and then take a buy and anticipate for the next candle to continue moving up. We got about 2 minutes left. All right, perfect. So candle has closed bullish. Looking at the 30-minute time frame, it's also bullish. I think impulse entries here are very risky based on the candles they have printed. Okay, so I think this is going to be a pretty good idea over here. To take a buy, have stops below the 15-minute time frame. It's going to be like a 10 pip stop. We're going to use like 1% risk over here, and yeah, makes sense. And we're going to aim for it to continue moving up because the 15-minute candle has closed above this area over here. We're expecting this. All right, never mind. Never mind. So that was our first attempt at this buy over here. So we're gonna wait over here now. This 30-minute candle is about to close at this point too. Yeah, this is good. Because now we took one attempt at the buy, we got stopped out, and now we're gonna give our buy a second chance. If we get that confirmation. If not, then we're gonna call it a day and we're gonna go to the next New York session over here. So I think it's going to be a pretty good indication to do that. All right, because this happens to a lot of people, right? You take a buy, you get stopped out, and later price goes to where you want it to go, and you don't know where to enter, right? So we're going to try to see if we can get that in over here. So this candle is about to close in about, there we go. Candle has closed. 30-minute candle has closed here as well. And let's take a look on the 1 hour time frame. Perfect. 1 hour candle looks perfect to continue moving bullish. These are overwhelming confirmation for price to move up. Looking at the 30-minute time frame, we can also continue moving up if we break above the high of the 30-minute, and then we can go up. Yeah, I think that's going to be a pretty good idea here. If we break above the high, we can continue moving bullish. Sir, if you can stop interrupting me, I think it's going to be pretty nice. Like when I stop talking, then, All right, let's see over here. Price is coming down. When it starts to break the high, I think that's going to be a pretty good idea to take a buy at that point. All right, perfect. This is the time we're going to take an impulse entry. It's going to be like the same risk over here. Stop is going to be the previous 30-minute candle, which is around 12 pips. Buy 12 pips. Yeah, perfect. We're aiming for price to come up to this point over here now at this point. Because once we start breaking the high, so now we've kept the stop below this current 30-minute candle. Because if it's creating a low over here, we're anticipating. So here's the thing, right? Price went down, created a low, And now when it's breaking the high over here, we're anticipating it to respect this own low, and after it breaks its own high, to make a higher high for price to continue up. Because, candles move by making higher highs and higher lows, so that's what we're anticipating at this point. So even if it retraces, that's totally fine, because we're entering based on the fact it's breaking the high for price to continue up overall. So this was a pretty long wait period at this point. All right, perfect. Looking over here, we're about 9 pips, 8 pips, 11 pips, coming up to this point over here, 12, 13. We're going to close partials at this point, close around 70%, and leave the rest run at break even. So when you give your trade a second chance, you aim to go break even for the day, or you increase risk? Never increase risk. Always aim to go break even for the day. So the bearish candle with the long wick to the bottom, could that be liquidity grab? Yes, that's a liquidity grab. Oh wow, look at that. Continuing over here. Let's take a look on the 4-hour time frame here. We're moving straight up over here now. Looks like we can come up to fill this wick on the 4-hour time frame. Visual mode. All right, let's get visual mode over here. I don't even know what visual mode does. Okay, perfect. So let's remove these arrows over here. So I think that was a pretty good trade here for the day. Oh wow, runner is seriously moving over here. So probably going to close right over here. So we can see there was a huge waiting period here, right? Price moved up, had indications to go up, but there were no confirmations on the small time frame, 30-minute time frames. First, we had a possible move right over here, but it broke in the first 2-3 minutes, didn't really make a low, and eventually it came down. There was no confirmation for sells because we had rejections at this point. And as we can see over here, price started to reject this area here. Price went up over here. There was no buys at this point because we had a resistance. And then we had more rejections. And then later on, when candles formed something that we could identify as a good trade, that's when we started to execute the trade. So always got to wait for candles to print something that you have seen before for it to have a high probability of working out. Oh, damn, still moving over here, about like 20, 23, 30 pips. All right, let's move on to the next session here now. Straight retracement. Straight retracement right before the New York close. Sorry about the interruption. Price action got me excited. Oh, yeah. Yeah, no problem, no problem. All right, let's move on towards the next pre-New York. So this is the London open right over here. 4, 5, 6. 6 a.m. Eastern at this point right now. All right, so let's take a look at the weekly over here. And obviously weekly, we see it's still above the gap over here. It really hasn't really moved at all. Let's take a look at the daily time frame. Daily candle moved bullish, but seems like it's sort of like creating this rejection on the top side, also some sort of a rejection from the bottom side. So we don't know whether this next daily candle or where this next daily candle is going to go. So now we're going to take a look at the 4-hour time frame. And looking at the 4-hour, the first thing we need to do is we need to remove all these analyses from the 4-hour time frame. So we're going to remove all these analyses and we're going to take a look at what the 4-hour is doing. So currently, what we think 4-hour is doing is basically maybe we're rejecting this area, maybe not. This 4-hour candle is still open, so we're unsure about that. But what we can identify is that we're creating some sort of a resistance up over here for price to potentially continue down. And if we measure this range, this is like a 42, 43 pip range. Okay, so let's move on to the 1-hour time frame here. All right, so let's remove all analysis. Okay. So first of all, we see a support on the 1-hour time frame. Very apparent right over here. Second of all, we see a resistance right over here. And now we have a range, right? We have a simple range over here where this is support, and this is like almost a 38 to 39 pip range, right over here. Now, from the get-go, it seems like the 1-hour candle has closed bullish, so there could be a opportunity for price to continue moving up in this range, right? But we need to see what kind of a confirmation do we have on the 30-minute time frame. So let's clone this down to the 30-minute time frame, and let's take a look over here. So looking at the 30-minute time frame, what we have at this point is now we're also creating support, but we have a minor resistance right over here. And this minor resistance is what makes me a little bit uneasy at this point, because if we do take a buy, we have this minor resistance, which is like 9 pips away. So maybe we would want price to break above this area to have some confirmations for price to move up in this range. Makes sense? On the 1 hour time frame, it's clear as day to go up, but on 30-minute time frame, there's this minor resistance, so we can't really ignore that minor resistance there at all. So I guess we'll have to wait here a little bit to see whether price is going to continue moving up or it's going to continue moving down. So we'll have to wait to see what happens here. Looks like the 15-minute on Monday. All right. So we'll have to see if we're going to start rejecting this area, or let's take a look on the 30-minute time frame. Oh, see, we need to break above this area for price to continue moving up, or we need to break below this support for price to continue moving down. There we go. So we have some little problems over here we need to identify. All right, perfect. See, we're still ranging over here. We're in this little range. We can't really take a trade in this range. And we're going to denote this range with 2 blue lines. So we need either a break below or a break above. So looking at the 1 hour time frame, the candle's coming to a close. And yeah, we'll see what happens, how this candle closes. We got almost 10 minutes left for the candle to close. And okay, look at that. It's coming down. See, if this candle closes bearish, I think there's a very, very good opportunity for price to continue moving bearish. Just like on pound yen happened on Thursday. Almost happened on Thursday. So far we're waiting over here. All right, so candle has closed bearish. Is this a good sell over here? Why not? No wick. Yeah. Oh, no, this is not a good sell. What do you mean, guys? There's no wick at the bottom. And what do we know about candles having no wicks at the bottom? This means there's a less probable 50-50 chance, right? So you don't want to execute on a 50-50 chance. You want to execute on a, more than a 50% chance, right? So there's no trade over here because the candle closed with no wick. Even though it looks amazing to continue down, I would rather miss this trade than to execute on it because it has a 50-50 chance. Also, there's a rejection to the left-hand side. Yeah, also there's a rejection right over here too. So we don't know whether this candle is going to go back up or go down. We don't know that. So it's better to wait at this point. Even though if it wicks down, we actually don't know what's going to happen. Entry after rejection for buys or sells. Because if it comes back in the range, then it's back in the range. Then we can't do anything after that. Yeah, I mean, see, so now it's creating the support. If the next candle starts breaking the support, then we can look for sells. But at this point, there's nothing. Absolutely nothing at this point. Unless we have a 30-minute candle break above this resistance for price to continue moving up. Other than that, there's absolutely no trade. This 30-minute candle is about to close here as well. Oh, wow, look at that. Looks like we're going to be breaking up over here. Excellent. This is awesome. We're about to close in 3, 2, 1. Perfect. 30-minute candle has closed. Now, someone tell me, where will price go? Someone is saying, booby trap. Booby trap. Yeah, exactly. Up. But risk is too big. Okay, yeah, okay. But we have our confirmations. We're going to continue moving up. Right? And this is something that happened earlier in this session here as well, because look, price came down, broke below, had no wick at the bottom, so we decided not to take a trade. And then we see candle close back in the range, so this becomes a fake out. So like the trade we took, the first trade here in the session, this is the same situation happening now for price to continue moving bullish. And what we're going to do is we're going to remove these arrows, and obviously the stop loss is going to be pretty big on the 30-minute time frame. So we're going to consult the 15-minute time frame to see if we can have some sort of a decent stop loss. So if you look at the 15-minute time frame, what we can see here is our stop is going to be 19 pips, right? But our range is around 20 pips. See, now, since the stop is 19 pips, what I would want to do is normally, okay, what's this? Visual mode is like MK to identify stop and target. Okay, so nothing's happening with the visual mode. Oh, okay. Once the things are in. Okay. So what I'm going to do is at this point, since the stop is going to be too big, I'm going to have a stop in the middle of this range over here. Because if I want price to continue moving bullish after this fake out, I'm not expecting candles to come deep in this range, right? Hope this makes sense. Because if a candle comes deep in this range, that means the candle is going to start closing back in this range, and then we should be out of the trade at that point. So that's what I'm doing at this point. I'm not even waiting for this candle to break above the high because we've already broken above this resistance. This is enough confirmation for price to go up. So that's what I'm doing at this point. So we're going to do our 1.5% risk as start. I've been set stops like this, set around 75%. Yeah, it makes sense. Let's see the 1 hour candle. 1 hour candle is bullish. It's also broken above the high. So there's a higher confirmations for price to continue moving up. Looking at the 4 hour, 4 hour also trying to move up over here after this small bearish candle at this point. Could you explain why you don't wait? What do you mean? What do you mean why we don't wait? Don't wait for what? I mean, we have confirmations, right? Wait for entry. Oh, we are entering right over here. I already did explain why we're entering. I explained everything why we're entering at this point. Our confirmations are up, candles closing above resistance. We're anticipating price to continue moving up. I explained why I'm having my stop loss here. I explained what happened down over here for price to move up. And as we can see, price is coming up over here. And we look at the trade over here, we're up about 16 pips at this point. We're closing up above towards this resistance here. The whole idea is to understand why price is moving up. That's it. That's the whole idea. Executions, you can look into the executions, but the whole idea is to understand why price is moving up. You know, what's the probability it's moving up rather than moving down? That's it. That's all what we're doing at this point. So we're going to close partials here, close around like 70%. Actually, let's close 80% and leave the rest running at stops at break even at this point. I'm so happy this trade happened. I didn't trade Friday because I was unsure of stop loss. I could have done this and caught pips. Yeah, this is something I've been experimenting with. You know, like if the stops are way too big, you know, if this was a 20 pip stop, could have had it in the middle of a range, anticipating price to not come deeper in the range, you know. But then again, you're taking a risk as well, right? So now we look at the 30-minute time frame is closing at this resistance over here. Looking at the 1 hour time frame is closing at this resistance. We have a risk-free trade. If it continues moving up, it's going to be a bonus move. If it comes down to stop us out, then it is what it is, right? We tried. Yeah, Brandon has been at it for a long time. And so it's I can see everything's trying to click now. Yeah, so this is a runner at this point over here. So trade was taken based on a 30-minute, and this is basically a runner at this point. I mean, if it continues running, continues running. If it stops it out, it stops us out. So we're going to let the 4-hour candle close at this point. Oh, wow, look at that. We're coming up in this range over here for price to continue moving bullish. Wow. It's actually beautiful. 30 minutes still open. So we're going to close this trade as this hour ends, and then we're going to move on towards the next day over here. You know, I'm pretty surprised USDCAD has good moves. Probably because it's March, you know, when there's a lot of volume. But the main thing is understanding price action. How should we add extra positions? We couldn't have added extra positions over here at this point. We couldn't have. There was no confirmations. Okay, so we're gonna close that trade right at this point over here. Close that trade over here, and that's it. We call it a day. And now, how would you manage risk at this point if price starts to come down? We didn't have any opportunity to manage risk at this point at all. We didn't have that opportunity. Price never came against us for us to manage trades. The only way we managed trades was when price went in profits, and we managed our profits. So with the candles opening above resistance, we can anticipate continuation without a retest. No, 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 no. You have to anticipate a retest. You have to, but there's like sometimes there's going to be a retest, sometimes there will not be a retest, which is why the stop loss was in the middle of a range, because even if price came down, I wasn't expecting it to wick all the way through this range. We were expecting it to kind of like come back in the range and then do a retest to continue moving up. At times, price is going to do a retest, and there will be times where price will not do a retest. So it's like, either or. Something that happened right over here, right? Price went up, broke above this resistance, next candle did a retest, but there was no confirmations here to take a buy because the stop was just way too big over here. This was a different situation than what it was right over here. All right, let's move on to the next section over here, which is going to be, so, oh wow, look at that. Let's move on to the 4-hour time frame. Let's see how this is developing here. Okay, so this is closer to, without volume, does price action or fundamentals even matter? Yes, price action still moves. I mean, you got to understand what you mean when you talk about no volume, right? Without volume on USDCAD, it means you're trying to trade the New York afternoon, or you're trying to trade the Asian session. That's when there's going to be no volume in USDCAD. But if you start focusing on USDCAD during the New York session, then obviously there's going to be lots of volume, right? So this is what, 10, 11, 12, 6 a.m. Eastern right over here. So let's take a look at if we have any news over here. We have no news, nothing at all, just clean, sunny skies. So let's take a look on the weekly. The weekly is obviously still bullish, haven't really came down to retest to fill this gap, whatever, just continuing bullish over here. Daily candle is also continuing bullish over here. This daily candle is still open over here, so we gotta see what's happening on the small time frames. So looking on the 4-hour, let's remove all analysis here first on the 4-hour, like this. And then we're going to draw our resistance. Obviously on the 4-hour we have a resistance over here. I think this is the most recent support. I think there could be a support over here, but we're not sure because we'll have to take a look on the 1-hour time frame to see if there's a support here or not. So let's take a look on the 1-hour time frame here now. And looking at the 1-hour, what we can identify is first is that there's a support formed over here, and also there is a resistance formed right over here. Right, and if you measure this range, this is a 25 pip range, and price is in this range. Now let's copy this over to the 30-minute time frame, and let's see what more information we can find. So looking at the 30-minute time frame, looks like there's another fake out down over here for price to move up, but this isn't enough range now. It's like a 12 pip range, so we really can't do anything in this range. So I think it's going to be a better idea to kind of like wait to see how price is going to form or how price is going to move, and then maybe we can see what we can do at that point over here. But so far, there's very little that we can do. So we're going to let price play out over here. What I think a better opportunity is going to be, all right. What I think a better opportunity is going to be that if we start breaking below the support, for price to probably fill these wicks and then continue on down towards this range over here, like 20-30 pips, or we can wait for price to break above this resistance and anticipate price to continue up to this range over here, which is like 20-22 pips. I think that's going to be a better area there. I'm very bullish on this chart. Yeah, me too. Me too. I'm also very bullish at this chart, especially on 30-minute as well. If we start breaking above, I think we can continue moving up in this range over here. But the thing is, can we find confirmations or not? So we're going to have to wait and see. So we'll have to look for a 30-minute confirmation here. So see the candles coming up. So we want this candle to close bullish to execute buys at this point. And there we go. 30-minute candle has closed bullish. And all right, let's measure this range. This is like a 15 pip stop, 17, 16, 17, 8 pip range, almost like a 1-to-1 risk reward. Let's take a look on the 15-minute time frame. Looking at the 15-minute time frame, yeah, we're also bullish on the 15-minute time frame, but on the 30-minute, it looks way better. It looks way to pass the high. Now, here's the difference when we wait for price to pass the high. Now, it may seem a little bit confusing, but it all comes down to experience and how much you have seen price break the high and without breaking the high. So here's the thing. If we wait for this candle to break the high over here, right, our stop is going to be well below the previous candle, which is going to be 20 pips, right? Or provided that this new candle makes a low, then our stop's going to be below that low. But if we don't wait for price to break the high, then our profit target is not only bigger, but our stop loss is also much smaller at that point, right? These wicks don't matter. And the reason why these wicks don't matter at this point is because if you look at this candle closed above this candle and it closed above this candle right over here. So if we put a line over here, we can see how that candle is closing above all those candles, and also the bias is bullish at this point. So now you got to ask yourself, right? You got to ask yourself these two questions. What's the probability that this next candle will all of a sudden just drop down? Right? You got to ask yourself. And the answer is going to be, well, there's a low probability, right? And then you got to ask yourself that, okay, what's the probability that the next few candles, let's hope not this one, what's the probability that the next few candles will continue moving up? And you're going to say there's a higher probability that the next few candles are going to continue moving up. So we got to quit. Do you worry that price has already moved too far already? No, we don't worry, because this is when there's volume in the market. And when there's volume in the market, I think we can get that trade up. So let's do this over here. So we're going to have like a 15 pip stop over here. We're going to use 1.5% risk at this point. We're going to take a buy position over here. And okay, hold on. So if I do the visual mode, yeah, what does the visual mode even do, man? It does nothing. You guys trying to make me change things. It works before you set the trade. Oh, okay. It works before you set the trade. Okay. See, I'm not that tech savvy. I'm not that tech savvy at all. So since we took this trade, if this next candle comes back in the range, then we're going to manage our risk at that point, right? If it comes back in the range, only then we're going to manage our risk at that point. But so far right now, we have our stop down over here, we have candle right over here. And the reason why the stop is a good stop loss, because if price comes back in the range, then we can manage our risk. We can close positions early and really aim for like a lower loss at that point. So the 15-minute candle is coming down over here. It's about to close. All right, 15-minute candle has closed bearish back in the range. So this is where we're going to close 50% at this point and really cut down on our risk, right? We close 50% and now we're going to leave the rest running at this point. 30-minute candle is about to close here as well. Oh, it's closing back up in this range over here. Well, it's a good thing we managed risk, right? We managed risk. 15-minute candle is about to close. And there we go. 15-minute candle has closed. Do you always close 50%? Yes. I don't close full. If I'm going to close 50%, I'm going to let the rest hit stop loss. Or let's say if this 15-minute candle closed bearish, and if the next one closed bearish before stop loss, then I would close another 50%. So at this point, if we look on the 1 hour time frame, now 1 hour time frame has closed bullish. We can look at that. It's closed bullish. Now there's also still a high probability for it to continue moving bullish. Looking at the 4 hour time frame, 4 hour time frame is also moving up at this point. Looking at the 30-minute time frame, 30-minute candle closed above that support. Looking at the 15-minute time frame, we also closed above the support. So now this is where we can potentially look to add a position we closed, right? So this is where we can basically add 0.75% if this candle starts breaking the high over here for price to continue moving up. Makes sense? So we closed out 50%, right? We had a 1.5% risk. We closed 50%, which means we closed 0.5% risk, 75% risk. So now we can add it back if this 15-minute candle starts breaking the high over here. See right over there. We're breaking the high. So this is where we can add the risk back and have like, a decent, nice, like a 12 pip stop, something like that. So this is where we're adding our position back to the trade, which we think is going to continue moving bullish. Let's manage. Oh, nice one. Look at that, man. Beautiful. Just absolutely beautiful. Yeah, let's just start closing. Oh, before I did that, I wanted to move the stop up towards this low over here as well. So probably going to close the first one, close this one partials, close 80% over here, and put stops at break even at this point and let it run. So I think this was a really good example on where to add a position back, because we had confirmations on the 1 hour here as well now, high time frame confirmations. So it worked out really, really well at this point. Man, I mean, USDCAD is a pretty good pair to trade. I mean, I'm not going to lie. I'm starting to like USDCAD now. Only if we can speed up real time so we don't have to sit. Yeah, I mean, the hardest thing is to just sit and wait. That's the hardest thing that you're going to go through. To just sit and just wait for price to form, wait for price to move. That's the most hardest thing at that point. All right, so basically at this point we can probably move to our next Friday over here. Do you ever multitask while you wait? Oh yeah, always I'm multitasking. I'm answering questions in the gulag. I'm looking at charts. I'm looking at other pairs because realistically, when I'm in a trade, I'm just waiting for the 15-minute candles to close, or the 30-minute candles to close. So we can see right over here, price is now forming our highs over here. So I think at this point we can really trail our stops below these 30-minute lows at this point over here, right? This is where we're going to trail our stops. So yeah, and we're going to let the rest run. Let's take a look on the 4 hour. 4 hour is also bullish. Daily is really, really bullish over here. Wow, USDCAD is just pumping. That doesn't work with impulse entries. I think. Oh, all right, let's see how this 1 hour candle closes. We have a runner running, so we're going to wait an hour for the 1 hour candle to close, and then we're going to move to our next session, which is going to be a Friday session. So we're going to forward this candle over here. Oh, wow. Oh, we got stopped out over here. Okay, no problem. We got stopped out. All right, so let's move on to the next. Oh, damn. Damn, Daniel, what is this? What news was this? There was no news. Yeah, there was no news at all. Wow. Coronavirus. Yeah, probably coronavirus. All right. Yeah, let's move on to the next session over here. Oh, wow. Look at that, man. Crazy. Crazy moves over here. Going straight up. Okay, so this is going to be our London session. London, 4 a.m., 5 a.m., 6 a.m. Eastern right over here. So let's take a look on the weekly candle. The weekly candle is making a wick on the top. Man, this was a pretty nice simulation over here. We had some great moves. Actually, we're going to talk about that later. Looking at the daily candle, daily is probably rejecting an area to the left-hand side. We can't see that, so we're just going to trust that there's an area there. Let's take a look on the 4-hour time frame. 4-hour is also rejecting a strong, strong resistance. Look at that. It's mostly seems like it's coming down to correct this move up. So we're going to remove all analysis here first, and then we're going to take a look at that over here. So let's remove this, and then we're going to remove this. Perfect. So the only thing we have on the 4-hour is a resistance and a candle coming down. So now we got to take a look on the smaller time frame. Wow, it's a big candle, man, 100 pips. So let's take a look on the small time frames here on the 1-hour time frame, and let's see what's happening on the 1-hour time frame here. So looking at this, the first thing we have is we need to remove all analysis here first. Remove this, and then we gotta also remove this right over here. All right, perfect. So, wow, seems like, man, we have a clean candle coming straight down. Okay, we have probably some sort of a support over here. Probably price is creating some sort of a support here, which we can't really see. But there's also support over here. And then if we, now, this is pretty interesting, right? Let's look at this on a 30-minute time frame at this point. Let's move this up a little bit. and clone it onto the 30-minute time frame. Now on the 30-minute time frame, this is what we got on the 30-minute time frame. We got this support, we got this momentum coming down, and I think if we start breaking below, we can continue moving bearish at this point. But what we got to identify is we got to identify if are we going to break these supports, are these same supports on the 15-minute or not. So looking at the 15-minute time frame, we do have now some more information over here. Let's zoom out here a little bit. All right, so we want some sort of a resistance to form, and then we want price to continue moving bearish. That's what we want to see. So looking at the 30-minute time frame, yeah, that's what we want to see. We want price to break below this low for price to potentially continue down in this range, because we had mirroring candles that went up, and we're looking for the same mirroring candles to come back down. Isn't harder to see chart when it's so zoomed? See, if you zoom out, it's good to look to the left hand side, what's happening and this and that, that's perfect. But when you zoom in, you can actually see the candles, the wicks. You can potentially see where you want to enter and stuff like that. So for entries, I like to zoom in on the charts to see the candles, how they're forming. Because what we're looking to see candles form, you know, and what better way is to look for candles to form unless you're kind of like zoomed in like this. So hopefully we can create some sort of a minor resistance for price to continue moving down in this range. Oh, actually, this is 5 a.m. We got to forward this. All right, this is 6 a.m. right over here. Yeah, this is 6 a.m. right over here. We were looking at 5 a.m. My bad. So price price basically moved down over here as we were trying to like move forward. So anyway, let's take a look over here. Let's see if we can still find some positions here, because now it's kind of too late, right? And now it's too late is because prices already moved down so much, and as prices move down by a lot, it increases its probability to retrace a little bit. So maybe it can retrace, create like a minor resistance, and then give us some confirmations to continue down. Probably we can wait for that. But the idea was still valid. All right, this 30-minute candle is about to close. So like this retracement, whatever that retracement is going to happen, is going to be inevitable, because as price moved this much, it increases the probability for it to kind of like retrace a little bit. So perfect. 30-minute candle has closed bullish. Looking at the 1 hour time frame here, 1 hour time frame is kind of like bouncing off this area. Looking at the 15-minute time frame, we're also coming up over here. Okay, let's see over here. It's like a 20 pip stop, 20 pip, 20 pip move up over here to this area, and then we got a 20 pip stop down over here. And looking at the 15-minute time frame, you know what I'm thinking? Since we've moved down this much, I think we can kind of like retrace. So and also this is a Friday over here, so I might want to take like a little bit of a risky trade. And if I'm going to take a risky trade, it's going to be on a like a 0.5% risk over here, because it's going to be sort of like a bonus trade over here. Because if we came down towards this support area and we created support on a 30-minute time frame, we should be continuing to move up to probably retrace up till like this area right up over here, 20 pips away. So let's do this. We're gonna have a 20 pip stop, and last day of FTMO challenge, need to be aggressive. Yeah, last day of the FTMO challenge. So the reason why I'm executing a buy over here is that we came all the way down over here. So much bearish pressure, and if we move a lot down, and if we're getting some sort of a confirmation over here for price to kind of like retrace or to go up, that's the move that we're anticipating for price to sort of like, continue moving up here a little bit. So stop is going to be right below this area over here, and we're anticipating price to move up over here because we had a clean move down, so we're anticipating a clean move up over here as well. Plus also we're up 6%, so we're up like 6.69%, so we can risk 0.5% over here, and still be in good profits here for the week. So yeah, I mean, even if it retraces, and I think if the 15-minute candle closes bearish, then we can manage our risk at that point. But yeah, let's see over here. 6% is still pretty crazy. All right. So 15-minute candle has closed. Let's take a look at the 15-minute candle. 15-minute candle is closing bearish. Now let's just forget about simulation. Let's forget about all confirmations and this and that, and let's just focus on something that I'm going to explain right now. Let's just focus on how to add another position to the trade, right? So we have the 15-minute candle closing bearish. Obviously, we're in a sell at this point. No, we're in a buy at this point. 15-minute candle has closed bearish. It is closed against us. So what we're going to do is we're going to close partials here because, we got to follow our risk management rule. We're going to close partials over here. And now if this next 15-minute candle starts breaking the high, then we can add that risk back onto the trade and then really expect price to continue moving up in this range, right? So we're only going to talk about that based on this without discussing where the trend is and this and that. So we're only going to focus on how to add another position onto this trade if it continues to move up. But if it continues to move down, then we're going to further manage our risk at this point. So we're only going to add the position that we took off, basically. I can add a full margin trade if you want, just for the shits and giggles. All right, so we're about to close over here. The 1 hour candle is about to close. Oh, in the last minute, looks like we're making a turnaround. Okay. So let me just go back here because we kind of missed it. So we're gonna go back over here and we're gonna let it go up. So when it comes up over here, breaks the high, then we're gonna be adding that back because we had to add that back. So this was a good exercise here. So in the last 2-3 minutes, it was still bearish. We weren't managing risk, and as it's coming up over here, okay, it moved too fast, whatever. So this is where we're going to add the rest of the position back, right? So for just for the simulation sake and just for the sake of this is going to be the last trade we're going to take, we're going to add, let's say, 1% back, and the stop is going to be below this current candle, which is going to be around 10 pips. Right, so we got our confirmation. We continue up the start of the new. Okay, man, damn, look at that, still moving over here. Wicks too fast. it moves way too fast. All right, so we're gonna close this one position here. Probably gonna close partials. Probably gonna close like 70%. Put stops at break even and let the rest run. So yeah, so I think today we had 2 examples of how to add the position back to the trade which you've taken off. Man, I think this simulation was a very, very educational simulation here. And as we can see here, we took profits and price just came down over here. We rejected that level exactly over there. So so if it's now continues down, it continues down, but if it goes up, it goes up. We can't really do anything about it. Oh, actually it went up over here. Okay. Perfect. Awesome. So we talked about how to add positions. We talked about how to take risk off and then put risk back on with more confirmations. We talked about a little bit of impulse entries, and we also talked about a little bit of an advanced topic of putting stop loss back in the zone. We also talked about fake outs. So I think this was a well-rounded, beautiful simulation session we did here today. If this was your first simulation session, beautiful. We're going to have another one maybe in 2 weeks because next weekend I'm not going to be here and we do them, bi-weekly. So awesome, guys. Perfect. Thank you so much for showing up. I appreciate it. You guys took the time out of your day to, come on here. This will be in the database in about 3-4 hours. And yeah, perfect. Thanks. And have a great weekend. Thank you. Thank you. Thank you for showing up, Kasim. Thank you, guys. Man, now you guys are making me blush over here. So, hey, thanks, guys. Have a good weekend.